Hello, I'm Neil Screeton, owner of Screeton's Limited Chartered Accountants. One of the most common questions asked by clients is regarding the pros and cons of company cars through a company. So today I'm going to talk a little bit about company cars in owner-managed limited companies. Company car benefits is payable if you have any private use of a company car. It's calculated using a couple of three different figures. First one is the new list price of the car plus any accessories. Now bear in mind that is always the new list price. Even if you buy a second-hand car, the car benefit is worked out on the new list price. That figure is adjusted by any capital contribution that you make towards the car. So if you personally put an amount of money towards the cost of the car, then the benefit figure is reduced by that amount. Once you've got this the adjusted list price figure, you then have to calculate the appropriate percentage, which is based on the CO2 emissions of the car. Obviously, the higher the CO2 emissions, the higher the percentage, up to a maximum of 35%. So obviously, hybrid cars, part electric cars all fall at the lower end of the percentage. So you multiply the appropriate percentage by the list price, and that gives you the car benefit value, which you are taxed on personally. Now that may be 20%, 40%, 45% depending on your rate of tax. In addition to company car benefit, there's also fuel benefit. Now this applies if the company provides the director with private and business fuel. It's a set figure of 21,700, which is then subject to the same appropriate percentage as the car is. It's got to be said that the fuel benefit does not really work out unless you do a lot of mileage. It's best avoided. Therefore, if you can pay for your own private fuel, then it works out generally better from a cash point of view. Commercial vehicles such as trucks and vans are treated differently for benefit purposes. Generally, the benefit in kind is much lower. So yeah, a company car, there is a cost to it. There are certain allowances you can claim against the company, but the general rule is that unless you have a very low emission car, then you will probably end up paying more personal tax than the company saves in corporation tax. So it's one thing to bear in mind. If you're thinking of getting a company car, if you have any questions on company cars, leasing versus purchasing, etc., please don't hesitate to get in touch. We're at info@screetons.co.uk, www.screetons.co.uk, 01827 715 264. Thank you.